Hello everyone, welcome to EduTap and welcome to Finance 360-degree session in which we are going to discuss three very important news articles and one very important RBI notification, okay? So I hope I'm clearly audible and visible. Give me a thumbs up if everything is fine. And today we are going to discuss about the RBI's norms in regards to due diligence for the Aadhaar payment operators, okay? So what is the APS system and what are the APS touch points and the touch point operators? All of this we are going to understand, and what are the timelines that have been given, that we are going to understand. The second news article is regarding the Sebi that has introduced the special measures for the voluntary delisting of certain public sector undertakings, okay? So the public sector undertakings can have the voluntary delisting from the markets, from the capital market. So how it will happen and for which public sector undertakings, that we will understand. The third news article is regarding the relaxation that the Sebi has provided for the startups in regards to the ESOP. So what is this ESOP and what are the relaxation? All of this we are going to discuss, and the important data points that are important from your examination point of view, that we are going to discuss, okay? So these news articles, they are very important from your objective point of view for the phase 1 of the examination as well as for the phase 2 of the examination, okay, for the RBI examination and for the Sebi examination. So let's get started. Give me a thumbs up if everything is good. Okay, so good morning everyone and welcome to the session. So now let's get started with today's topics, but before that, do subscribe to the YouTube channel of EduTap so that you continue getting these relevant videos, and do join our Telegram channel where you will get the PDF of the session, and the link for the Telegram channel is provided in the description box below, okay? So starting with the first news article, that is in regards to the Aadhaar enabled payment system due diligence of APS touchpoint operators. So why there was the requirement to release the new norms or to release the norms in regards to the due diligence? Why the RBI has released these new notification? So first of all, in recent times, what is happening that there have been reports of fraud perpetuated through APS due to identity theft or compromise of customer credentials, okay? So to understand that what problem was coming in Aadhaar enabled payment system, you first have to understand about the Aadhaar enabled payment system, that what is Aadhaar enabled payment system. Then you will understand that how the cheating was happening, how the cloning was happening, how the data was being stolen, okay? So let's first understand about the Aadhaar enabled payment system. That is a payment system operated by the NPCI, and this is a bank led system, okay? So Aadhaar enabled payment system, this is a payment system operated by the NPCI, National Payment Corporation of India, that facilitates interoperable transactions, that facilitate the transactions using the Aadhaar enabled authentication. APS plays a prominent role in enabling the financial inclusion. Let's say you do not have a mobile phone. Let's say you do not have the UPI ecosystem because you do not have an Android phone, okay? Or let's say you do not have the credit card or debit card. But let's say you have a bank account. Let's say there is a farmer who has a bank account, but he do not have the Android phone, and due to which he does not have the UPI ecosystem with himself. Now the farmer is lacking the cash. He has gone to the market to purchase the fertilizers and to purchase the pesticides, okay? Now the farmer wants to pay to the merchant, but the farmer do not have enough cash. The farmer will have to go to the bank to take out the money, or will have to go to the ATM to take out the money, but in the village the ATM is not very near, the bank is not very near. So what the farmer can do is use the Aadhaar enabled payment system. The farmer can give the details to the merchant, like the farmer is giving the Aadhaar number to the merchant, and the farmer is giving his biometrics like either the iris scan or the thumbprint, and the money can be taken out of the farmer's bank account to the merchant's bank account. You can understand that this is a very useful means for the financial inclusion. So the Aadhaar enabled payment system, this was launched by the NPCI, this is operated by the NPCI also, to enable the financial inclusion, so that these individuals or these people that do not have the UPI ecosystem with themselves, or they do not have the Android phones and such, they are not able to do the digital transactions because they do not have the Android phones. So they can use their Aadhaar number, they can use their details to do the transaction from bank account to bank account without using the cash. I hope you have understood the main idea that why the Aadhaar enabled payment system was launched, okay? Now we will understand more of the details so that you have better clarity. So Aadhaar enabled payment system enables easy, online transactions through multiple authorized channels to improve the accessibility to the underserved or unserved areas. So the Aadhaar enabled payment system, it works very well in the underserved or unserved areas, okay? Through a bank's business correspondent. I have told you that let's say the ATM is not nearby. Let's say the bank branch is not nearby, but let's say there is a business correspondent that is very near. Business correspondent are the arms of the bank. So bank cannot reach to every nook and corner of the country. The bank cannot reach to each and every village, but the business correspondents, that is the arms, that is the extensions of the bank, they can reach to the different nook and corner of the country, okay? So business correspondents, they are the agents, they are the agents of the bank, and even the kirana shopkeeper can become the business correspondent. Even any shopkeeper, even the different shopkeepers can become the business correspondent for the bank, okay? So now let's say the merchant do not have the system to take the biometric. So the farmer can go to the nearby business correspondent to take out the money, okay? So business correspondents, they are authorized by banks. So they are the authorized entities. Business correspondents, they are the authorized entities of the banks who represent the bank, who are the extensions of the bank, and who have micro ATM, who have these micro ATMs. These are the micro ATMs that are used to take the biometric, and these are used to take the details, okay? So here you can see that through this, the biometric can be taken. So they have the micro ATM devices to facilitate the customer transaction. So through the business correspondent, the farmer can get the cash. Now the farmer do not have to go to the ATM, or the farmer do not have to go to the bank branch, okay? So the Aadhaar enabled payment system, it lets the farmer to have the cash withdrawal, cash deposit, bank balance inquiry, mini statement, Aadhaar to Aadhaar fund transfer also, purchase, self-help group transaction also. So here you can understand that farmer through the business correspondent can take out the money, can do the cash withdrawal, or can do the Aadhaar to Aadhaar fund transfer. So Aadhaar is linked to the bank account. So from the farmer's bank account, the money will go to the merchant's bank account. So Aadhaar to Aadhaar fund transfer means bank to bank fund transfer that is connected with the Aadhaar card. Or let's say the merchant, at the merchant location itself, the merchant has the ecosystem, has this micro ATM kind of thing. So a purchase transaction, so basically the merchant itself has the ecosystem to take the money through the Aadhaar enabled payment system, okay? So a purchase transaction can happen under the Aadhaar enabled payment system, where any merchant can accept the payments using the Aadhaar number or the valid identification number, that is the Aadhaar, like the virtual identification number, that is the Aadhaar number, and biometrics of the customer. So I hope this is very much clear that the farmers or the street vendors or the micro enterprises, they can use the Aadhaar enabled payment system to do the transaction. Even let's say I'm going to a shop and I have forgotten my mobile somewhere, or let's say my mobile has gotten stolen. I have gone to, let's say, some other state and my mobile phone, my bag has been stolen. So I will go to a merchant and I will say that, okay, I need to withdraw the cash. So what would I require? Just my Aadhaar number and my metrics, okay? So this is the idea that I can do the cash withdrawal, cash deposit, balance inquiry also. Aadhaar to Aadhaar fund transfer can happen. Mini statement purchase as well as self-help group transaction can happen through the Aadhaar enabled payment system. And what would I require to give? I would require the Aadhaar number or virtual ID, bank name, biometric captured during their enrollment. So biometric I will have to give, and transaction type, that do I want to do the cash withdrawal, do I want to do the cash like Aadhaar to Aadhaar transfer, fund transfer, or do I need to deposit the money, and what. So I can do different transactions through the Aadhaar enabled payment system. I can do it through a business correspondent, that is the arm of the bank, or even the merchants now allow the Aadhaar enabled payment system through their devices. Any confusion in this? Any confusion in the Aadhaar enabled payment system? Any confusion, anyone? If the Aadhaar enabled payment system is clear, that means everything will be very much clear to you in this news article. So in recent times, what is happening? There have been reports of fraud perpetuated through the Aadhaar enabled payment system. So what is happening? Let's say the farmer is going to a kirana store and the kirana store, or let's say a farmer is going to a shop, a small shop, and the farmer is thinking that this is the business correspondent and giving the biometric, giving the Aadhaar number. Now let's say that person is not the business correspondent. That person has opened the store to take the details of the people and to steal the money from the people's account. So this was also happening, that through the Aadhaar enabled payment system, there were fraudsters that were cheating and they were taking the details by doing the fraud around this Aadhaar enabled payment system. Okay, so here you can see that like let's say through these devices the biometric or the details are being taken. Now this is the correct device. Now this is the device that is the skimming, that is having the skimming equipment. Like this is the skimmer equipment. So this device, it has a skimmer equipment. Skimmer equipment means this is the additional equipment that is attached so that the details can be stolen and the fingerprints and the iris scans and such kind of data can be stolen. So there were various, in recent times there have been reports of frauds perpetuated through the Aadhaar enabled payment system. A farmer, a street vendor, a small vendor, a small enterprise is going to the business correspondent, or let's say a like impersonating business correspondent. So the person is not the business correspondent, but the person is impersonated as the business correspondent, and that person is taking away the details of the individuals, multiple individuals. So you can understand that the biometrics are being stolen, the iris scans, the thumbprints, iris scan, Aadhaar number, they are getting stolen. So that means how much of the money can be taken out from the accounts without any consideration. The money will be taken out of the account. Okay, as well as there was also cloning of the biometrics was happening. Let's say in this device, let's say you have to give a thumbprint. Okay, so you are giving a thumbprint on this device. Now your thumb is getting scanned, as well as in the in this device, let's say there is a very thin film that is being placed. So in that thin film your thumbprint is also going, and that film is getting like made into a clone of your thumbprint. Okay, so that was also happening. The cloning of the biometric was also happening. So through the Aadhaar enabled payment system, there were various frauds that were reported, that okay, cloning of the biometrics is happening, or the biometrics are getting stolen through the skimmer equipment, through such kind of skimmer equipments where the equipments are being hidden inside the device so that the biometrics can be stolen. So in recent times there have been reports of frauds perpetuated through the Aadhaar enabled payment system due to identity theft. So identity theft is happening, Aadhaar card biometric details are being stolen, or compromise of the customer credentials is also happening. Okay, so to protect the bank customers from such frauds and to maintain trust and confidence in the safety and security of the system, a need is felt to enhance the robustness of the Aadhaar enabled payment system. So as soon as the reports were found by RBI in regards to these frauds, the RBI released the due diligence notification. Okay, so right now the frauds are not very much, but there are chances for the frauds to even increase further in our country in regards to this AEPS system. Okay, and that's why the RBI has released this direction for the due diligence. So here accordingly, as announced in Statement on Development and Regulatory Policy document in February 2024, it has been decided to issue directions for streamlining the process for onboarding of Aadhaar enabled payment system touchpoint operators. So who can have the Aadhaar enabled payment system, who can operate the Aadhaar enabled payment system, as well as strengthening the fraud risk management. Okay, so these steps had to be taken, and the RBI has now released the directions that has to come into effect from 1st January 2026. Okay, so this is the idea. So now what are the definitions? First of all, so Aadhaar enabled payment system we have understood. This is the payment system in which transactions are enabled through Aadhaar number and biometrics or OTP validation, providing financial services such as your cash withdrawal, cash deposit, account to account transfer, or Aadhaar card to Aadhaar card fund transfer, as well as non-financial services like your mini statement and balance inquiry and such. Acquiring bank, so this is the bank which onboards the Aadhaar enabled payment system touchpoint operators. Okay, acquiring bank is onboarding the APS touchpoint operators. Now what is the APS touchpoint? So here you can see this is the touchpoint. This is the touchpoint. This is the device through which actually your biometric details are being taken and your other details are being taken. Okay, so this is the touch point. This is the touch point. So the terminal that is deployed by acquirer banks. So acquirer banks are deploying the terminal. This is the terminal that is getting deployed, and you can see that how like there is very less space here. So that means this is an authentic terminal. While if you see, if you want to see a terminal that has the skimmer device, so the terminal will have a lot of space. These kind of terminals, they have the skimmer equipment that steals the biometrics. While if you see the original authentic terminals, they do not have that much space around themselves. Okay, so this is one way to identify the skimmer terminal. Okay, now coming back, so the terminal deployed by the acquirer bank to facilitate AEPS transactions. So this is AEPS touch point. This is the kind of AEPS touch point through which the Aadhaar enabled payment system can be completed. Okay, so the terminal deployed by the acquirer bank to facilitate the AEPS transactions, which shall include both the mobile points as well as the fixed points. So this is the kind of mobile points that can be taken to the village and to the multiple places. The fixed points, they are fixed and they are connected to the wires and such. Okay, now next is AEPS touchpoint operators. So basically you can understand that who is operating this terminal, that is the AEPS touchpoint operator. Okay, so AEPS touchpoint operator, they are the individual onboarded by the acquiring bank who operates the AEPS touchpoints. So it can be a merchant or they can be the business correspondents also. Okay, so this is the AEPS touchpoint operator who is operating the terminal, who is operating the AEPS touchpoint. So I hope everything is clear till now. Now coming to the details, not many details are there, just 3 or 4 points are there. So first of all, the acquiring bank shall carry out due diligence of all the AEPS touchpoint operators before onboarding them. So before onboarding them, due diligence should happen. All the details have to be taken so that it can be identified that this person will not do the fraud. Okay, adopting the same process as indicated in the customer due diligence procedure for individuals that is given in the master direction of know your customer. Like know your customer happens where customers details are taken, Aadhaar number, video identification or the biometrics are taken of the customer. In the similar manner, there is the requirement to do the due diligence of the operator also, Aadhaar enabled payment system touchpoint operator. Okay, so this is the idea that due diligence is required. In case, however, if the due diligence of the Aadhaar enabled payment system touchpoint operator has already been done in their capacity as business correspondent, that means the entity, let's say this XYZ entity, it is already a business correspondent of the bank and has been working as a business correspondent of the bank. So in this case, the due diligence has already happened of this business correspondent or this sub agent. In this case, another due diligence is not required if the due diligence has happened earlier. Okay, then the same may be adopted. Okay, so the earlier due diligence can be used. The acquiring bank shall also carry out periodic updation of the KYC for the ATOs. For these AEPS touchpoint operators, the periodic updation of the KYC should happen so that it can be identified that the person is still doing the work ethically or not. Okay, and usually see the business correspondents as their details the bank has. So these business correspondents, they work in a very ethical manner. But the problem is that there are many other entities that might be impersonating as the business correspondent. So we have to be careful in this regards, as well as business correspondents have to be they have to be careful that their devices are not getting tinkered with by the external parties. So let's say a fraudster is coming and saying that, okay, this is your mobile, can I see? Okay, how does it open? And they are like they are putting a chip in this. So that kind of thing can happen. So the business correspondents have to be very careful when they are working with their terminals, when they are working with their touch points. They should not allow this touch point to get tinkered with by anyone else. So business correspondents have to be careful, as well as the banks have to be careful, and they need to continuously do the periodic updation of the KYC of the ATOs. In cases where the ATO, where the AEPS touchpoint operator has remained inactive, that is, has not performed any financial or non-financial transaction for a customer for a continuous period of 3 months, that means that terminal has not worked for 3 months. In this case, you can understand that the financial or non-financial transaction, financial transaction means cash withdrawal, cash deposit, fund transfer. Non-financial transaction means the mini statements, the balance inquiry. If that is not happening through this terminal touch point for 3 months, the acquiring bank shall carry out KYC of ATO before enabling him or her to transact further. So before allowing the terminal to work further, the KYC has to happen. Then only after the KYC is again done, after that the further transactions can be allowed. Okay. Next is risk management. So this is in regards to due diligence. Now for the risk management, the bank has to be aware, and the acquiring bank shall monitor the activities of the ATOs through their transaction monitoring system, that how much money is getting taken out through the business correspondent, or how much of the money is getting transferred from one account to another account, how much cash withdrawal, cash deposit the business correspondents are allowed. So the transaction monitoring system should be there for the activities of ATOs on an ongoing basis, so that it can be identified that from one account there is not much money that is getting taken out, and set operational parameters based on business risk profile of the ATOs, aspects such as location and the type of the ATO, volume and velocity of transactions, that how much of the volume of transaction is happening, the number of transactions that is happening, the value of transaction that is happening. So this shall be notified, and there should be the parameters that should be present. Okay. So these aspects have to be taken into account when the bank is forming the fraud risk management framework. The operational parameters regarding ATOs shall be reviewed on a periodic basis, reflecting the emerging fraud trends. So as the frauds are emerging, there are different kind of frauds that are coming up. So on the basis of different kind of frauds, the banks have to take the prudent measures. Okay, so operational parameters or operational guidelines should keep on updating as per the emerging fraud trends. Okay, this is the idea. The acquiring bank shall put in place adequate system level controls to ensure that any technological integration like the APIs are used only for enabling the APS operation. That means if any technological integration is happening, that should help the APS operations and not let the frauds to happen. So this is the basic idea. So the first news article is done. Any confusion, anyone? If you want to know about the courses and such, you can mail us here or you can call us at this number. Okay. So the team will be helping you. Right now, focus here. So Sebi introduced measures for voluntary delisting. Okay. So small topics are this. We have to do 2 more topics now. So Sebi has allowed the voluntary delisting. So let's get started. So Sebi board, that is Securities and Exchange Board of India, the board meeting happened, and in that board meeting there were multiple decisions that were taken. So Sebi board announced several measures, including steps to facilitate voluntary delisting of certain public sector undertakings. So it has been said that the Sebi is going to allow the voluntary delisting of certain public sector undertakings. That means if the public sector undertaking wants, they can get out of the capital market, they can delist themselves and they can become private, they can come out of the capital market. That's the basic idea. Okay. So Sebi board introduced special measures for public sector undertakings to undertake voluntary delisting when the shareholding, now the particular criteria are there, that voluntary delisting can happen when the shareholding of the government as a promoter equals or exceeds 90% or other public sector undertakings they have. So when the government and the other public sector undertakings has equal to 90% or more than 90% of the shareholding of this public sector undertaking, then the public sector undertaking can have voluntary delisting. So basically, when the government control is equal to or greater than 90% or government ownership in this public sector undertaking is greater than or equal to 90%, or at least the PSUs are able to cover up. Let's say government ownership is 80%, government shareholding is 80%, and the public sector undertakings ownership is 10%. So cumulatively they have 90% of the ownership of the public sector undertaking of a particular XYZ entity. Okay. So in this case, the voluntary delisting can happen. So Sebi board introduced special measures for voluntary delisting when the shareholding of the government as a promoter, as the shareholder, major shareholder, or other public sector undertakings equals or exceed 90%. So this is the idea. Okay. Next is PSUs, that is other than banks. So public sector undertakings, the voluntary delisting can happen for other than banks, NBFCs and insurance companies. That means the banks, NBFCs and insurance companies, they cannot have the voluntary delisting in this regards. So public sector undertakings other than banks, NBFCs, insurance companies in which aggregate shareholding of the government or any PSU equals or exceed 90% of the total issued shares of the PSU. In this case, the delisting, voluntary delisting can happen, and under the proposed mechanism, PSUs could go private through a fixed, or PSUs could have they can go and they can come out of the capital market, they can do the delisting through a fixed price delisting process. So what is this fixed price delisting process? In this fixed price delisting process, under this, a fixed price is decided on the basis of Sebi regulations, on the basis of the average of last 60 days of the price or the highest price of the share in the last 26 weeks. So the fixed price will be decided, and let's say the fixed price for the share is decided as 1900. 15% more than that will be the price at which the shares will be bought back. Okay, so basically if the delisting has to happen from the capital market, the shares have to be bought back. Let's say 10 people have the shares of the XYZ company. Now the government wants to delist this XYZ company. That means wants to take this XYZ company out of the capital market. So these 10 people that have the shares of the XYZ has to be paid. So how much will be paid? That is the fixed price delisting process tells that the payment should be on the basis of a floor price that will be decided, and 15% above the floor price has to be given to these 10 people so that the voluntary delisting can happen. Okay. Yes. So here under the proposed mechanism, PSUs could go private through a fixed price delisting process irrespective of whether the shares are frequently traded in the stock market or not. However, the fixed delisting price would need to be at least 15% premium over the floor price. So if the floor price is decided 1900, so 15% above that will be the actual price on which the shares will be bought back by the government or by the company. So this is the basic idea of the fixed price delisting process, where a price is decided on the basis of some Sebi directions. A price is decided and this is the floor price, 15% above the floor price. At that price the delisting will happen actually. Okay, so the regulator has relaxed the requirement of securing approval from 2/3 of the public shareholders for the delisting proposal. So before, what used to happen that, okay, these are the 10 people that hold the shares of this XYZ company in the capital market. So there are 10 other people that hold the shares of this XYZ company. So the permission had to be taken from 2/3 of these public shareholders in the capital market so that the delisting can be done. Okay, but now it has been said that the government, if the government is doing the voluntary delisting, it can happen for any PSU other than the bank, NBFC or insurance company, in case the government or the PSUs have the ownership of that particular company of 90% or more, and there is no requirement of the permission that has to be taken from the public shareholders. So this 2/3 of the, so the regulator, the Sebi, has also relaxed the requirement of securing approval from 2/3 of the public shareholders. So this is not required now. So this is the basic idea that you need to keep in mind, that the government, if the government or the PSUs have 90% or more than 90% of the ownership in a PSU, so the voluntary delisting of this PSU XYZ can happen. There is no requirement to take the permission from the public shareholders in this case, but the company should not be a bank, should not be a NBFC, should not be an insurance company. That means it should not be a financial entity. Then the voluntary delisting can happen through the fixed price delisting process, in which a floor price will be decided and the shares will be bought back from the capital market at a 15% above the floor price. Okay, so this is the basic news article. Now coming to the next one, that is currently rules. So in regards to Sebi's reform on ESOP norms for startup founders. So have you heard about ESOP? That is ESOP that we know about. Floor price is a minimum price. Okay, that is decided on the basis of the Sebi regulations. So it might be on the basis of the average of past 60-day price of the share, or it can be on the 26-week the highest price in the 26th week, the highest price of the shares in the 26th week. So on the basis of the SEBI guidelines, the floor price, minimum price is decided. Okay. Now ESOP, anyone who is aware about ESOP? So here basically ESOP is what? Like many of my friends that are working in multinational corporations, they also get the ESOPs. ESOPs, let's say they are getting the salary of 1 lakh per month. So they are allowed the employees to 25% of their salary in the shares of the company. Okay. So let's say my friend is working in XYZ company. She's working in XYZ company. She's getting, let's say, 1 lakh per month. So up to 25% she can invest in the shares of the company itself. So she can invest 25% of her salary every month in this XYZ company. So let's say she will invest 25,000, or let's say she is only investing 20,000 every month in the shares of this company, and the shares are provided to the employees at the discount of 15%. So the employees, they get the shares at a discount of 15%. Okay. So it is benefit for her that she is purchasing the shares worth 20,000, but she is getting the shares at a discounted price. But she will have to keep the shares for the 6 months. That means the employees, they cannot sell the shares immediately. They at least have to keep the shares for 6 months. There is a lock-in period. Okay. So this is a benefit that is provided to the employees. They can get a share in the company, and they get the shares at a discounted price. So this is a very good deal for many of the employees. So the ESOP is an employee stock ownership plan in which the employee benefit, this is an employee benefit plan that gives the workers, the employees, ownership interest in the company in the form of shares of stock. And many different companies have different policies in regards to the ESOP, but this is an example that I have taken from my friend, that let's say her salary is 1 lakh per month. So she can get up to, like, she can invest up to 25% of her salary in the shares, and the share she will get is at a discounted price of nearly 15%, but she has to do a 6 month of lock-in. This usually happens. So it is a benefit for her, because you can understand that she is getting the shares at a discounted price. The shares are also like improving, or the value is improving, so she is getting the double benefit. She just has to keep the money locked in for a period of time. That's it. So this is the idea, that ESOP, the employees can get the ESOP, that is employee stock ownership plan. So here currently rules require the founders to be classified as promoters. So the founders that have found the company, they need to be classified as promoters at the time of filing of initial public offering document. That means if a startup or if a small company wants to get listed in the stock market, in the capital market, if the company wants to get listed in the stock market, in this case the founders have to be classified as the promoters. However, once listed as promoters, they are ineligible to hold or be granted share based benefits. That means once the founders have been classified as promoters, then they cannot have the shared they cannot have the share based benefit. That means then they cannot have the ESOP. So usually in the startups, what happens, that the owners or the founders, they also get the ESOP benefit, because the founders, they consider themselves as the employees only, because they also work as the managers, or they also work as the handlers of the company. Okay, so the founders, they also get the ESOP benefit in the company, okay, because they consider themselves employee. But once the founders, they are listing their company in the share market, so the founders, they will be considered as promoters, and it is said that the promoters cannot have the ESOP benefit as per the SEBI regulations. Okay, that means if once the promoter is if the founder is classified as promoter, then they are ineligible to hold or to be granted share based benefit. Okay, if they hold employee stock options at the time of filing of offer documents, that is, if they are filing the offer document for the initial public offering, they are required to liquidate such benefits. They are required to let go of the benefits before the IPO. This is said by the SEBI chairperson. Okay, so this kind of rule was impacting the founders, because they were losing a lot. They were losing this kind of benefit that was provided to the other employees. So now a good measure has been taken by SEBI. So in a major boost for startup founders eyeing the public listing, so the startup founders that want to do the initial public offering, that are creating the offer document to do the initial public offering. So for them, there is a benefit that is provided. The SEBI has approved crucial changes to allow retention of ESOPs for promoters. That means now the startup founders, after being classified as the promoters also, they can continue with their ESOPs. They can continue with their employee stock ownership plan. So for promoters, addressing a long-standing regulatory bottleneck in the IPO ecosystem, because if before the founders, if they wanted to do the IPO, they had to let go of their employee stock ownership plan, but now it has been said that the promoters can continue with their ESOP. Okay. Until now, the promoters were required to forego any share-based compensation such as ESOPs before filing their draft red herring prospectus, that is before filing their offer document, before filing this. So whenever the initial public offering has to happen, the company will be for the first time offered to the public. So before the IPO, there is draft red herring prospectus. This is the offer document that has to be released with the details about the company and such. The financial details has to be mentioned. So before the IPO, the offer document is to be released. So now it has been said that until now, promoters were required to forego any share-based compensation, that is they had to let go of the ESOPs before filing their offer document. The latest amendment permits founders. So the latest amendment has been done that permit the founder classified as promoter to retain the ESOPs that is granted at least 1 year prior to draft red herring prospectus filing. That means the promoters or the founders can now keep their employee stock ownership plan. They can keep their ESOP with themselves if they have got the ESOP at least 1 year prior to filing of the offer document. This is the idea. Okay. Any confusion here? So here the move is expected to ease listing pathways for high growth startups where founders typically hold equity based compensation. Okay, where the founders, they are holding the share based compensation. Any confusion here? So basically the founder that have these share based benefits, before they had to let go of their share based benefits if they were doing the IPO, but now it has been said that they can hold on to their ESOP even if they are doing their IPO. This is the idea. Clear? So this is the first news article. Sorry, this is the first question of the first news article. So try to answer this question. This is a homework question. So before I show you the other questions, there is a perspective 360-degree series that is going on, that is taken by Jaskaran sir, and this perspective 360-degree series is very important for your answer writing practice. That is very important for the examinations like the RBI exam and the NABARD examination. So you have to do the answer writing practice. Now which questions or which topics are the hot topics from where the questions can come in the descriptive paper of the examination. So here the answer writing practice can be done through the perspective 360-degree series where Jaskaran sir brings out the questions from the recent topics, and in this series you will get the recent topics, the questions, descriptive questions from the recent topics, as well as how to write the answer, what can be the points that you can use in the answers, that is also shown, and the topic is also discussed with you, that is quite in news recently. So this perspective 360-degree series, this is on Monday, Wednesday and Friday at 5 p.m. Okay, so this is the first question. Try to answer this. Now coming to the second question. So this is the second question. Okay, I hope you will be easily able to answer this question also. Okay, now moving forward with the third question. So this is the third question. Try to answer the latest amendment that has happened, and the founders will be allowed to have the ESOP if the ESOP is granted at least dash prior to DRHP filing, offer document filing. Okay, so thank you everyone. Thank you for joining the session. Do give the right answer of the homework question. See you in the next session. Thank you everyone. If you have any confusion, write down in the comment section. Okay, and if you want to contact the team, you can contact the team through this number, that is 8146207241. Okay, so many students were asking about the number, so this is the number. Thank you everyone. Thank you for joining.